morning, class. Welcome to Homeroom with Unk and Market Monk. Morning, P. How's your week?
It was good. It was short week and didn't mess around with it much. There's only been one time that on Black Friday I even really tried to do anything, and it was just annoying and tedious. And you got the short day and nobody's around. I mean, it's not worth it. Um, so did well on a few things. Kind of hit the bottom on Bitcoin. Um, so yeah, sticking with coin and MSTR there, that did well, and just a couple other smalls.
I mean, I'm with you on the um, don't trade the Friday, and I tend to turn it off. Maybe even the Wednesday before um, that. But last week we talked about don't look at the long term account when shit's on fire, for the lack of better terms. Well, that came back pretty good this week, so
Yeah,
I didn't feel bad at all. And then I had a couple of I don't really want to call them thesis swings, but just where there's activity, where they're going against the grain charts for me. So, that Alto did really well, hitting a target. And then just kind of getting into the DCA plays. I mean, DraftKings gave us 10% this week trying to DCA into that. I mean, sometimes that's a trade, right? And Square, Block, whatever you want to call it, doing good. And then the gold and the silver on Fridays, anything that we've been in that I'm waiting for taxes on, those had a pretty good fucking move. So just the overall pretty good week if you were, in some things or you've been trading, a couple tickers, but looking for new stuff, not really out there unless it's starting to DCA those longs, which we did talk about last week.
yeah, definitely. And I, sector wise, still working on a full rundown of all the sectors. That takes some time, but I wanted to do that because things were a little slow on the as far as urgency. I mean, there's a lot of moving parts right now about you know, January contracts, where are we going to move those? Kicking the can down the road. Particularly in some of the sectors that have maybe pulled back a bit, or I'm thinking like rare earths or stuff like that. And then the some things that stand out like steel and some other metals are kind of setting up, but I don't I've kind of thought for a couple weeks that it definitely is kind of winding down into the close of the year, and I don't know. I would imagine that this week's going to be a big week to see what's going to get kind of a pop to close the year. There still are some pretty big earnings reports out there, and all of that, but a lot of the bigger whales I followed that led to some of the moves that we've seen are kind of looking to that March through the summer, um, and particularly in things like oil. So I'm definitely I'm looking for those kind of swing setups is what I'm after. Not as many quick hitters at the moment. So I think that the to close that, I think that the best ones of those are going to be isolated, and we'll see them not part of some big sector story. A lot of small caps. You mentioned Alto. There's going to be ones like that, and fortunately, we have some history and some levels with a lot that fit that criteria.
Yeah, I mean, I think we're a little early on the sectors. As we go more along our journey, the first year we just brought up oil, we're like, all right, old guy, and after you hit the home runs on the sectors once or twice, you start to pay attention. So for me, it's more of like a Christmas thing, because we're still in that rotation, which I expect, and we're gonna get the SPY rotation. The tickers in and out of the S&P 500. It's just such a good year. It feels like we're a month early on people taking profit. Um, didn't happen in the COVID market, probably because most of those were mop heads, I assume. But just in a regular market, you do see this around this time of year. So I'm I'm looking again. I've said it last week and continue to say it this week and probably 3 more weeks. But I'm just looking for the good opportunities. The gray haired trades, so to speak, on the stuff I want to be long in, off of those levels we talk about, and the sectors will come. As where you started though. I mean, that's I was laying in bed last night thinking about your professor, and I was like, all right, man, what contracts are important to me tomorrow? Like, where is it at? And January I think is just a transit station. I don't know how else to put it, but there's just
Yeah.
gonna be movement there. Like, no matter what, it's just like that's active. Like that's what the vanilla people think about when they talk, leaps or whatever, or they did buy a leap 2 or 3 years ago. It's going to be January, so just a lot of movement there. That March, I think, is where we're going to live.
Yeah.
April and beyond is just the tax normal. Again, that's your six. That's your .5 traders. Ones that are a little bit more educated. Got a halftime play in there. The summer flow, we've seen that before. That's the second punch. It needs that short term. So waiting for that short term punch to come in, mindful of where the long ones are at, I think is where we'll do good. And it just comes into focus. I don't think it should be here, and it's again I touched on it a couple weeks ago, but like I can golf usually, so I have something to do with my hands. But in these markets, you need to really make plans or find something to do with your hands. Damn, that's a good one.
Well, and yeah, and so I had the mall stocks. I guess for 2 weeks now, I've been talking about those, and a number of those did really well, and part of it's driven by, um, you get some good earnings reports out of Gap and a couple others, and even Macy's has kind of settled in nicely, holding, it's held its rally pretty well, and I think the issue there, the everyone's looking for like big weakness in the American consumer, and when the perception is that consumers are really struggling, cutting back, not spending, whatever, and then it comes out that well, they are spending, and it's above what people expected. A lot of these charts were kind of in the ditch, or in the midst of a severe pullback in anticipation of, I suppose holiday spending is going to be there, and then it starts to come out. Well, people are spending money. It seems to me, and just my perception of, I guess this is anecdotal, but just what I see is that like people will do anything to keep spending money. They'll run up debt. They'll get a second job. They'll hit the gig economy, which is a whole other story. And yeah, I mean, people are going to spend. I don't know. I don't think you're not going to have the uh, Great Depression era thriftiness out of that generation. Doesn't seem applicable to what's going on today. People are going to buy shit. What they buy and when, and all that um, can vary, but there's a lot of cheap consumer goods, and a lot of uh, you know retail therapy. Like people shop, and I just think that it's hard. If that's your short thesis, you're gonna have a hard time. I guess that's my take on that.
And I mean, there's enough. I don't want to say middle class because I think that's a outdated way to put things. But there's
Yeah,
enough people out there with disposable income that just do retail different. That it's a changing market. Like I don't know how else to put it, but like people sit at home and shop on their phones because they have fucking money. Like it's just
yeah,
it's a cultural thing now, does that work perfectly for the mall? No, but it does for the back end of the store, and we seen it with the news. I can't remember when the news was, but that they weren't going to have a lot of hiring for the holidays. Some stores weren't going to hire at all. Well, that doesn't mean that people aren't buying them, are buying stuff from them. And when they do buy stuff and they don't have to hire a bunch of employees, that really helps the bottom line. You can figure that out, math problem out on your own. But
yeah.
it, it, yeah, I think the ones that survive figure out how to, you know, I don't know how else to say it, but have storefronts only for returns, because that's where the world kind of is going. And
Oh, right. And then, I mean, how well have we done on discount stores or dollar store? I mean, like, so, I look at the high end neighborhoods in Oklahoma City or the towns around here, Edmond, Nichols Hills, all these places. And, there's Dollar Trees all over the place around those. There's Ollie, there's, you know, um, BJ, like all that stuff. And so it's, even people with money, um, will look to save some money or, Ross and Marshalls and, all that kind of stuff. And there's opportunities there. I mean, you just had to wait. You just had to wait for a lot of those charts to really just bottom out. I mean, Dollar Tree, Dollar General. When we're saying when we say this is $100 stock, we don't want to be saying that when it's $97.
no,
We want to say it when it's $72 or $78 or $82, whatever it is, and so we know this about the stock. So the flow comes in, and and you just trade around that. Ollie, a little bit like Casey, I guess, just sort of followed it, kind of just all the way up. The flow just kept rolling and going, but yeah, I mean, I just think that you have to really see past a lot of the macro doomer news, and it's not about being a perma bull or something like that. There's a lot of ways in which I think those macro impressions are accurate, but it just doesn't matter with respect to stocks. These
sure,
companies don't have to just have blowout earnings, and they don't have to have the kind of demand you see in semiconductors or something like that. A lot of it's relief and equilibrium. It's like, oh shit, well they're gonna make it, so you know here you go. I mean, Macy's at a time was trading as if it was going under, and it didn't look that way in the flow to me. Knowing enough about their business, I didn't think that was going to happen. So that one was easy, and now we just see, like, does this have it in it for a next leg up? So we go back and we reassess. And I think that a lot of home runs are going to be doubles the second time around. If you go into it with that in mind, I think you'll do pretty well. Just don't let greed take over.
yeah, I would definitely and kind of take two steps back to the general current market. Um, One of my notes is, if you search a ticker and it's been 6 months or the longer the better, to be honest, and we haven't mentioned it, it's probably going to give you a good trade. But market conditions usually dictate the if the wind's blowing, whether it's baseball or golf, it's going to affect the distance the ball travels. And in the short term, that's just where we are. So saying thank you is huge for me. And my example would be the Alto. And I do have a bottom here. I was going to throw it at you, so I'll just throw it at you now. But either you sold Chegg or you didn't. And
Yeah.
that's just where we are currently. And both of those tickers I talk aren't Apple. They're not Google. They're not Tesla. They're not John Deere. They're not Lilly. So you just got to kind of know where you are in the overall market. And I think there's the one thing that popped in my head is the only thing I fucking agree with that Kramer guy. But there's always a bull market somewhere, and
Yeah.
this so you can call me a perma bull or whatever, but I'm sorry, I trade fucking shares to the upside. What do you want me to do? Um,
Yeah. Right. Right. Right.
I
Right.
mean, but
Yeah.
I'm a firm believer that there's always balance in the market. So and in the world. So what's good for one person is bad for another, and what's bad for one sector is going to be good for another, and it's just always has worked that way. It might not be equally distributed at said moment, but that's just how I've always looked at it, and it's why I enjoy working with you because you bring up some crazy shit that makes sense all the time.
Yeah, and those moments where if Nvidia loses $1 trillion in market cap, which can happen, just given how, like, it was over five for a little bit. That doesn't mean that, right. It doesn't mean that $1 trillion is going to go well to these two sectors. And here's and here's this and here's that. Like the money doesn't work like that. Something that just sort of evaporates, and then but there are definitely boosts to other sectors that you'll see, and so just being a little bit ahead on that is what I'm after. Same was with restaurants. I threw um, like two or three restaurants in my notes on Monday, and that pretty much just set the whole week for me. It was Play and Wing and Texas Roadhouse, and I didn't know which was going to do the best. I didn't expect Play to be the one that did the best of that group, but it did. That was just some simple relief. What I just said about Macy's, that's kind of where Play is right now. I don't think Play's not going under. We're
Sure.
well below our levels, and so it's not. It actually is. Was an easier trade when it was higher, and our levels were holding, and you could just keep doing that. So it's a different kind of thing now, but that can catch some momentum and run for 3 or 4 days, and you say thank you, and then you have a good average on a small position. That's what I did. But I was wondering, from your perspective, does it become a problem that so this administration, part of it is that they're using the shutdown, whether it's an excuse or reality or whatever. They're just like, well, we're not releasing these numbers, we're not doing these numbers. But well before that, there was a attempt to kind of reconfigure. We don't like how this data is collected or tabulated, or Democrats screwed this up, so we're gonna have to redo things. I'm gonna fire this person. This a sort of lack of I don't know transparency or changes to how data comes out, because the market's kind of used to regular cycles of that kind of thing, and it's the process has been unchanged for most of the time I've been following it. So does it become a problem that the way that economic data is handled and released at some point, you think?
Well, I always it's temporary in general, like until you have a trend, right? Like we've lost
Yeah.
jobs the last 3 or 4 reports or 3 or 4 months. With what happened over the last, I won't say the whole administration, but most of the tail end of the last administration, with just the revisions,
Yeah.
especially in the jobs numbers, I I think there's something there that is more than it's more political, I guess. So, I mean, it's one of their wars. I don't think they're doing it for the betterment of the market, the system, or efficiency. So, um, and maybe trying to stop something that happened, in general by doing it different. It's kind of how you break a system is you break the chain up and do it different. So, but I don't think it really helps the market or hurts the market short term. Anything without clarity is never good. But market's super focused on rates currently. Um,
Yeah.
so as long as I mean, because that's kind of where we went. The government shut down. We're not getting numbers. Oh, we might not cut rates. I mean, that's kind of what it was. I mean, it wasn't that clear. It was a little more out of the side of the mouth than that. But then we come back, we open up, we get a fresh batch of numbers. They're really super late, so they're delayed. But then we're right back onto the rate cut. So um, yeah, I I do pay attention to them because they move the market on the like. If you think, oh, I got this setup and jobs are bad, like it could just be a bad day. You have to be mindful. Like if volume's failing instead of waiting for another candle, then you gotta be a little quicker on those bad number days. So I use it for kind
Yeah.
of I use
The
it for that, not for like, oh my god, this is gonna affect my longs over the next year and a half.
I agree, and it's a little bit like the so yeah, two things on this. So the tariff, when the tariffs were first the thing, um, it's like when someone moves to Oklahoma and they hear a tornado siren. Oh shit! Oh man,
Yeah,
this is oh fuck, what's going on? And eventually, like you get used to those tornado sirens. You're mindful. You still check. Oh, okay. All right, that's in Edmond or Piedmont. That's not coming at me, so you know I don't have to really do anything. And so the tariffs and the new new deal with China and all that stuff, it started to not have that shock value to the market. You didn't get that volatility. The market kind of reconfigured and adjusted to it. So my perspective is whatever the market just kind of like with the economic stuff. All right, so what are we doing? We doing this every 3 months now? What's going on? Okay, fine, whatever. And then it just sort of adjusts to it. There's not a big panic about changes. I will say that from a day trader perspective, I think it's important to be really careful when the like futures shut off. They pulled the plug on futures
Yeah.
Thursday night, and they blamed some a data center overheating in Illinois. So you got one data center that could do that. I mean, I don't really believe that. But the when they kind of shut things down, or they shut off futures trading overnight, or the extended hours. All right, so that's a big one. There's nothing that says that these brokers have to do 24-hour trading, and I've seen them several times now pull the plug on it under extreme volatility. Um, that next day, there's opportunity there if you want to day trade, some good ones, but you got to be very careful when they start messing with the system like that. So I'm not a conspiracy theorist about it. I'm skeptical that a data center caused that, given what silver futures were doing. I think they were scrambling a bit, wanted to buy a little time to get their positions right, and then this is where you start talking about they.
Yeah.
But anyway, I just think you want to be mindful of things like that, of just when business as usual breaks down. Just don't feel like you need to rush back into anything. That's what I'd say. Like it's like trading halts. Like
Sure.
I'd rather be in a halt than try to trade it after it unhalts. I guess that's been my experience with those things.
Yeah.
But I
That's
don't know
usually good practice.
yeah, yeah.
um. Yeah, I mean, as far as conspiracy goes, I mean, there was a warehouse that burnt down, I think in Upper PA, that supposedly had every naked short seller thing ever in it. So,
Yeah, yeah, yeah.
I mean, they're not the smartest, but they are the connivingest people on the planet. So don't put it past them to have everything on one server that they can just pull a plug. Makes it
Yeah.
easier. Um,
Right.
do want to get into before we go to some boring stuff, because it's important to me right now. We talked about the 118% for some reason on the AMD a few weeks ago, and them moves, man. When you start getting a bigger account, if you don't rebalance a little bit or just go to free shares, the moves can be crazy, like ridiculously crazy, and have I don't want to throw no numbers out there, but having tens of thousands of dollars a move, as your high and low over a 2 week period can be really um, draining. So be mindful of your bigger positions this time of year, because that's what they're
Yeah.
doing. I mean, that's where we are in the market. As if you talk about that's what they're doing. They're a hell of a lot bigger, but they have rules they have to follow. Like they tell people, we'll only be this much weighted in every position, and yada yada yada. Just be mindful of that as you grow to not keep all the eggs in one basket. Find more baskets, and it's just easier on I don't know I don't know how to say it, people. When you had a good year, it's easier when you get to these moments when there is some rotation and you do have pullbacks. So I just want to touch base on that because it's going to be there. I mean, if people are up 118% or whatever on positions, checking back to 70 might be a thing. So just be mindful of taking profit at the higher points and reassessing the trade.
Well, the one for me was Oracle in that
Sure, good one.
that was a stock where it had a good position, and it was one I didn't need to do anything, didn't plan to do anything, just sort of let it sit there. But that move it made off that earnings report, um, you have to sell some. I
Hmm.
mean, unless you're not, have it from the company and aren't vested yet, or what, I mean, like, if you can't, that's different. But if you can, if you can sell some of that, you have to do it. And I was through that with Duolingo. It's so funny to me that that's like everywhere. That stock is everywhere now. I never saw it at all when we first started talking about it. Never saw anybody on Twitter talk about it whatsoever. But yeah, had to take some there. Wing, Roku. There's been so many. So I've kind of gotten used to that. And I when I first started to study ETFs, I was sort of fascinated by how they rebalance things, and I knew I wasn't going to do it like they do. But you know, it just doesn't work that way for an individual account. But I love the concept, and so I've always tried to find a method that I like for that. And it's not. There were times where I was too rigid about sectors. Well, I want to be 20% energy, and like
Oh, sure. Yeah. Yeah.
like but
Sorry.
for me it's been more about. And this I kind of got from you in a sense that I sort of let go of the sector idea as far as that goes. um, and well, it was more about individual name tickers and level. You break out of some zone we had, and then I'm mindful of when I'm going to start selling this stuff. I just put some of the stop orders in and set it for 30 days or whatever, and if it hits those, then the position gets
Thank you.
gets trimmed. I don't have to just. I'm not on a minute chart trying to make those decisions. You just kind of you already know. And I think the more that you already know, the better. And I say this all the time too. Like, get in setups where you'll know if you're wrong quickly. The quicker you know you're wrong, then and you can get out and just hit something else. You don't have to linger and hope and become a community member and become a conspiracy theorist about a ticker, because you're just hoping it goes up. It's like, okay, this didn't work, I'm out. And I know, for me with stop losses, I don't have like a rigid percentage in mind with stop losses, but I know, like, if it doesn't do this thing that I'm looking at, I'm out of here. Or I hedged it already and we'll do fine if I'm wrong. But even those, the in options in particular, it can't just park and stay still. You got to get out. Yeah, you have to have that escape plan too. So I might be wrong in that it doesn't move, and then I'm going to go ahead and get out. But I think the theme here, before I go to the boring stuff, is it's I guess a little corny, but just have a plan and stick to your plan. And the more thought and detail and rigor that you can put into that plan, the better you're going to do.
Yeah, I think what's helped me through the, I don't want to go too long here, but what's helped me is separating momentum trading from day trading and understanding the difference. That with just being able to scale in a little better. Even when I was starting, the RT room or starting our room, it would, three or four buys, two if it was moving fast would be all I would get, and I'm fine with seven, eight, nine buys, 10 buys now, 12 buys now. Just taking my time a little bit more in the zone and being able to play the under part of it. So sometimes the entry level is the exit level on the failed trade. I'm getting a lot more. To be honest, it's kind of the golf. Like, I can shoot an 82 in golf, not because I'm getting a bunch of fucking birdies. You guys see my scorecards. It's like one or two birdies around. It's because I'm not getting any eights, and that's
Yeah,
why I score good. So, like, being able to get out of a trade washed, even instead of holding it for 10% or 30% down and just being like, what happened? You know, that's the skill that I think has helped me more this year than anything. And in this market more than anything as it slows down.
Oh yeah, I mean,
Yeah,
with this is where
go ahead.
golf and trading are similar. I mean, if you stop blowing up, That's step one.
Yeah,
And then
yeah,
you'll start to do pretty well.
yeah. I got one question, and we're at 30, so I think we can fit it in.
Yeah.
I just wanted to put it in this session because I don't want to go long in the other session, and I kind of wanted to give the it's a holiday, give those people out there a little bit of something of what we do behind the curtain, so to speak. Um, it really general, so I don't know where it's gonna go on your end. But do you have like um unk flow? And what I mean by that is like when I throw a ticker at you and you're like, "Where's this? I haven't seen this ticker in forever." And then you open up the flow and you go, "There it is." Like like something you see every time from my end, and if it is or no, and explain what it is or if not.
Okay, so I mean the number one thing is share control is like the ones that are instantly A plus on your end. That there's existing share control in the open interest. So a lot of times with yours, the the flow that set up what you're talking about already happened, and I may not have even seen it yet. You know what I mean? Like that. It's they're already driving the car, right? And then they they juice it up a bit. Usually, where it's not we're not talking weeklies. It's uh, a series of monthly options and flow trickling in to existing open interest. So the basically the frame of the house is already built on your stuff you send me usually, and then I can see where the construction crew is starting to put up some things, and so that's the in general how I would describe it. Usually the in terms of the strikes, they they often don't hit the number you're talking about, but they'll bookend it. So they'll have one above and one below, and usually that's sort of the boxing glove comes in. So that's yeah, that's how I would characterize it. It's existing setup that's waking up, and I can kind of see how they're what they're trying to build around.
So to follow up, are they better when they're? And I don't want to give. It's hard. It's going to be hard not to give shit away, but I got to give examples. Are they better when they're like circle backs to your stuff, or better when they're just like some random shit? And I'm trying to think of two right now to not give away the farm. I'll just use screw it. But is it better like a unit or an MQ? Those are random. People don't know about those.
Oh,
So,
right.
you know what I mean? Like, because units is circling back to you. MQ is something that pretty much only I'm going to mention or have mentioned.
Oh, I would say um, yeah, by better
More consistent, sorry.
you well, okay, well, yeah, the consistency's you know kind of similar. I think the ones that circle back around ones they're often gonna take more time to play out, and you have to be mindful that that kick the can down the road, you know, is likely, is plausible, like that there's like 50-50 that's going to happen. So I think you'll do pretty well, but you might have to wait a long time. The ones you mentioned like that, the MQs, um, I think that you better go ahead and get on that. I guess like you want to whatever you whatever a starter is for you. If you want a piece of that,
Okay. Okay.
go ahead and get
Okay.
it. Yeah,
I see what you're saying.
yeah,
Well, the unit I'm playing with house money, no pun intended. So there's that.
yeah, yeah.
Um, yeah, boring stuff unless you got something.
No, those are good questions. Yeah, so we'll go with copper. I don't know. Go to the last 3 weeks of me talking about copper, and here we are. Okay, so we're on our way. 5 to 7 is kind of my thinking. It's not it's not going to be a moonshot. It's moonshot to 7, but this is part of the longer range 3, 6, 9 month idea, and there's stocks to trade around this, and they're not necessarily copper stocks. So aluminum, steel, etc. But anyway, so that's kind of playing out. Silver just went nuts. I mean, I don't know if you're just in. You got what you got, and there's new opportunities here and there, but you're doing pretty well here if you kept any.
Hey, I ain't talking no shit, but run the tape back. It's $100
Yeah,
bucks, and
yeah,
professor did. I legit was like, this guy is gonna call me crazy for even mentioning it. Maybe tell me 60, 70, just to not call me an fucking lunatic on live stream. And he was like, "Nah, $100 looks good." So that this happened, I fucking told you. That's all I gotta say.
yeah.
Yeah, holding it. I'm happy because I mentioned it in the opening. The gold and silver that I do have left. Friday was really nice. And I'm just really trying to make taxes on most of that. I'm not going to long those positions. I'm not longing gold and silver miners by any means, but I definitely make it to the taxes and scale out real slow. That's for sure.
Yeah. Yeah. And yeah, gold, similar deal. I mean, this still has that high. You could get into those wicks from before quite easily, but um, yeah, I mean gold's going to have a better year than Bitcoin. We can probably go ahead and close the book on that prediction. I think that that is true. I didn't expect it to be this much better, honestly, but yeah. So that's
What Bitcoin start the year at? Just curious.
um,
I only watch it on the minute chart. At 70? Yeah, that ain't happening.
yeah, yeah,
That's not, oh, yeah, God, Christ, no.
yeah, yeah.
Yeah, no way.
Yeah, and let's see, get
Technically knocked
into
out.
oil. You know, whatever. Early here. Um, there's some particular types of oil stocks firing up that have me kind of interested. Um, well, I mean, I'll just say it, and then I don't know. Like, if anyone takes the time to figure it out what they are, then good for you. But there's it's midstreams and pipelines, exploration. I mean, those are some key terms, and that that's your Trump drill baby drill thing that could, if he gets back to his roots a bit on that kind of idea, those could do pretty well. And
The
also, I will say that uh, now that we're in a second Trump administration, um, coal is the one that gives you some of the best trading opportunities.
mhm.
And so when coal stocks pull back and hit a level, sell off on news, whatever, those rebounds are nice. So you got coal stocks trading like tech stocks sometimes. So I think that's a sector to look at too. And then
Real quick on oil, there's
yeah,
a lot of FUD. I read a lot of news or old gray hair news, and there's just a lot of FUD that going around that oil's infinite. Um,
oh yeah, yeah,
so like
sure.
yeah, I mean like I I don't put anything past this administration. So start talking shit about OPEC and it not being needed. I could totally see that over the next 3 years. That would wreak havoc on the oil market. So yeah, just be mindful of that. But um, we're on the right path, so it shouldn't affect us negatively. Because if that is the case, the U.S. Production needs to ramp up significantly if we're going to be self-sufficient, and that's the stuff we're already on. So
Yeah, that was the oil supply. Um, I feel like thinking back to, I don't know, like elementary school, the environmentalist curriculum back then, I think was a little was wrong on that. I do recall it's like fossil fuels are going to run out, and it
mm-hmm.
made it seem like they're going to run out in our lifetimes. No,
Well,
not at all.
how many barrels of oil do you get from a fucking Triceratops femur? Let me know. because it's not a thing. I'm sorry, it's just not a thing, and I mean that might be conspiracy theory to some people. I mean, it might work. You might get some kind of like organic oil from a dinosaur fucking femur, but that oil is not produced that way. There is hundreds of billions of barrels in several different locations in this world, and it just dinosaurs didn't all just go to Alaska and fucking die right there. That's not how that worked.
Well, I think it was more plants, but yes,
Whatever.
still point taken. Yeah, yeah,
Whatever. It's just the math ain't mathing on that. It's an endless supply. It's like anything. It's like diamonds are, right? I mean, it's just a naturally occurring thing. Coal under
yeah.
pressure in the right conditions, like anything. But yeah, it's more about. That's always been about like produce that dirty shit in your country. Let's just be fucking honest. I mean,
Yeah.
it's what it's really about, and that was fine in the industrial days. Like same with steel. Look at fucking steel mills back in the day. Stuff is just cleaner to produce now. We can do it here. I think you're seeing that transition through time. I mean, it's a huge market. It's a world market, so it's going to take decades to change.
Well,
But
and by the way, with the rare earth elements, this happens too. And like, so someone there's like a meme chart about this. It's like, oh, there's some rare metal that's only in this one little corner of the world. Oh wait, U.S. finds supply
yeah,
of
yeah,
whatever it
the
is, and then
cobalt.
oh,
It's
we
that
got our own.
cobalt.
Yeah, yeah,
There's a fucking. I think it's Tennessee. Is a huge place, but we don't want to fucking dig the hole like that. So we do it in
right,
Africa. So, simple.
yeah, yeah. Uh, Natural gas. I think we're
That's where you
right
want to
here.
park at. That's where you park that.
Yeah,
Be.
yeah. And a lot of the combo companies again,
Mm-hmm.
kind of an old idea that's played out really well for us because you just kind of catch both of it. And I mean, so the reason to me to be in the combo plays is that when natural gas just has a really shitty day, those don't feel the full effect of that. Whereas if you're in a leveraged ETF in natural gas, you get killed. You'll go down 20% in a day,
Yeah.
and then you know probably recover, but you're kind of stuck there. Combo play is just more steady, and so if you want to day trade the ETFs and have some kind of like 3-day option swing or something, that's fine. But again, we kind of know the names here. There's about 5 I regularly go to,
Mm-hmm.
so um,
Just
so yeah, just stay on that.
just pick a level on a stock and buy it on those days.
Yep. All right, and then want to talk just China for just a minute.
Sweet.
Consolidation here. Yeah, we've talked before. Hang Seng. This is the one I do, but
Yeah.
same idea everywhere. But
Okay.
there's some pretty good names, and they're gonna be. I don't know that you're not gonna see me do a sector focus and just say China. I say that might happen, but there's names. A lot of these, honestly, like you tell me which ones are the best, and then I'll kind of let you take the lead there, and then see what I got. Some might show up on my end organically, but uh, yeah, good opportunities there. China sizing. When we have a specific term, you definitely want to pay attention to that. There's a way we trade bios. There's a way we trade China, and I would stick to that. As far as sizing and expectations, but good opportunities there. All right, and a 10-year.
Four.
So yeah, I mean, just kind of be mindful of this. Flush below 4 is gonna move back up. I think. I mean, I don't know that we're gonna get into the 3.7s or anything like that. So I would be mindful of some violent moves here. If those start to happen, maybe take a breath, back out for a bit. A lot of pop and fade setups happening.
Yeah, I did a nice channel there. 4 4 I think we said like 413, 415 in there is a good spot to hang out. That's your top right now, but just a consolidation. Calm that thing down a little bit. Looks good. Can you do one more element before you go to that one? Can you do lithium?
Yeah, sure.
I
What's up?
know it's a brick. We talked about it like uranium, but um, yeah, lithium's on that chart. You got lithium?
Oh yeah, yeah, yeah. There we go.
because when you're up 118% in positions, gotta kind of readjust plans. So
Right. Yeah. No, I think for lithium, for me, um, I would say that it probably should be 14 to 25, which is like a big range, I know,
sure,
but we're just still
young,
well below
okay.
neutral or equilibrium or whatever. So there's still a ton of meat on the bone, and
I'm free
I
in the
still
I'm free in the two
probably
little ones, but the big one I'm pretty exposed in after a good move, and I
yeah.
haven't seen any news around it. Just this chart definitely has some momentum though.
Yeah, no, I think they're looking for that equilibrium, center mass, market maker neutral, market monk neutral, whatever, and so it's one of the reasons batteries are probably going to be a pretty big sector as far as talking about next year, and then the specific lithium stocks too. So yeah, I'm with
Perfect,
you there.
perfect.
All right, and talk about the dollar real quick before we get to Bitcoin. Yeah, gonna keep around 100 and maybe try to set up a little channel here. Um, and it's just another one that you really should only care about it when it's surging upward. It's going to limit what the follow through on your day trades. I mean that not a big deal for swings usually, but um, yeah, I mean if you like, let's say I don't know, I'll just throw out like snow, right? I enter snow and I'm up 4% on the day. It's an options trade. Uh, I'm probably not going to go up 6 or 8% that day. It's gonna just kind of settle down. Maybe give up half that move, whatever. So you don't hang around. Don't linger in upside options trades with the dollar in this particular spot. Um,
Yeah, what
all
he
right, and
said.
then Bitcoin hit a pretty nice, I don't know, local bottom or whatever on this, and I don't know. I mean, on the follow through, a lot of people piling into coin now. Not me. I have my spot here, so it's like under 250. I'm gonna add, and and then it popped into the 270. So I have a spot in mind where I will go ahead and clear completely out of it. But yeah, certainly could get some follow through to know see what 300s wants to do again. But no, you missed it. I mean, if you wanted the Bitcoin stuff, you should have gotten some already. If you want to hop in and day trade, go ahead. But I just think either wait for this entry again or give it some time to set back up. But I don't have any big opinions about it. I just think 92 is a big deal. So that's got to be support or resistance, right? To me. So I don't know what your take is on it.
Yeah, I mean, big picture. I mean, it's just I don't listen to the FUD on Bitcoin because it's usually pretty embellished. So I don't really like how the world's ending bullshit or whatever.
Yeah.
It's just always conspiracy theory. So just kind of let the chart do its thing. And no, you did a good job calling the bottom here, Flush. Just need another week before I'll have an opinion on really what we're doing, especially with the low volume, not only in Bitcoin but in the overall market. Um, yeah, yeah. You need the buyers to come back in. Do they do it here? That's always the question with Bitcoin. Um, charts are the charts are short term tradable. I only traded one or two, but I was a little early on them, so I think that helped in general. And you see me go back to the smaller price points just because the sizing's easier there. I should have traded Mara though, but is what it is. BTIF made up for it. That's more my style, and those are scalping them. And I think a lot of them are scalpable right now or day tradable, um, especially if Bitcoin has a good overnight session.
Yeah, and it's going to continue on the shorter time frames. They're just hunting out leverage and liquidity,
Mm-hmm.
and it's And you can, I mean, if you really, quote, lock in and, want to just watch all that and get on the minute chart with Bitcoin, it's probably maybe the best sector to be on the minute chart for day, for like scalp trading, if that's what your thing is. But you still just, you got to be careful, be wrong quickly, avoid leverage. We don't have anyone in our room doing, 100x leverage on crypto. But yeah, I mean, that's the the idea that a Discord room, like, this would be like us finding some crypto guy who had been five other things and being like, hey, now we got someone who's got crypto handled
That's horrible.
and is going to tell you futures contracts on Pepe coin. But that's what a lot of rooms are doing. I mean, they're grabbing guys like that and like acting like that needs to be some big foundation. Uh, but we both are equally skeptical on
It
that.
might be just where the customers are at, P. To be honest, the engagement. With
Yeah, right,
customers.
exactly,
I mean,
right.
and it probably all comes back to that. Well, I got ADA and Batcoin on your screen. They're 42 and 28 cents. We don't even fucking mess with stocks under 80 cents. I should tell you to shut the fuck up. Uh,
Yeah,
so I think
yeah, yeah.
it's just a different place we're at in general, different audience, and I guess we're really not looking for an audience like that. Um,
Yeah.
hey, for the people that are listening that are trying to detox from that bullshit, that we have 20, 25 crypto charts that are actual stocks that are very tradable, every price point, and just go to where
Well, and
go to where you're familiar. For me,
if
um,
um if you look at this list,
no,
and we're ones that look at all those zeros in front of these,
yeah,
right?
no,
But what I like this list for
good.
is when Bitcoin's doing something, going down or up. I like to call this up and just see my general impression of where are all the coins doing, and if they're all down 6-8%, that tells me something about what I'm looking at, which are the crypto stocks and crypto proxies and whatever. Or if Bitcoin's down and they're holding their own, or whatever. I do care about the total out the look of the whole sector, that kind of thing. But not really that interested in individual names within that list.
Damn, talking about shit codes, and we had to bring in the mop heads. They weren't even worth our time this week.
Yeah, yeah, right. You want to do spy real quick?
Yeah, yeah, might as well touch base over there. That's
All right.
consistent. I'm assuming they most of those guys took the week off, so you're not going to have any big movement over there. Just
No,
their general maintenance. People understand that they maintain trades. Like they don't sit on their hands. They're always moving something around.
yeah. This is so much. There's so much dead OI into the end of the year. I mean, look at this list. Look at all these contracts are just gone. $2, $1, two, whatever. So a lot of that's going to clear out, and I can do a deep dive and clear, get rid of all that and see, what's going on. But actually, with Spy, I liked for just the contracts to just emerge, work their way into the existing list, and then it gives me a better idea. Because I just think you're going to get a lot of false positives if you do anything else. But the
Sure.
640 March, we talked about March, very much with you on that. This needs some kind of companion boxing glove for it to mean very much. Right now, they're selling it off, they're trimming it a bit, whatever, but they're going to work around this contract to some extent. So that's what I would be mindful of. I would think 660 would be the other one, but that would uh, that's where I'm at. I don't have anything definitive to the upside though, so I think they're going to throttle it. I wouldn't look for big moves up.
We kind of established a 650, 690 little consolidation channel here, if you can call that little. Um, yeah, it's under 10%, but 7, 8%. Um, man, I don't know if you could short that back to 660 in general, if that's the play. But I mean, I'm more of the don't panic at 660 and buy stuff. Um, so I do think we get there again because we're going to be in this channel. Um, yeah, no, I mean we're not just going to run to 700. Um, so yeah, you just kind of play the wave right now in that zone 650, 690 when it's towards the top. You know, that's when you want to start scaling. When it's toward the bottom, you want to start buying and look for the things that have bigger theses that are going against the grain. I mean, that's just where we are. It's a little harder to read. It's when I was a kid, you only had 13 channels, you know, on the little dial thing. Sometimes some of them came in pretty fuzzy and you could barely see the shit and you had to put fucking foil on the antennas and whatnot. This is kind of it's not a clear market right now. I mean, you can see, but can't really see clearly. So just be mindful. Don't, let's say it probably for the third, maybe fourth time. Don't panic when it's 660, man. Have a fucking plan.
Remember the VHF UHF?
Yeah.
Toggle? Yeah, yeah, yeah,
Little toggle box. Yeah, oh yeah.
yeah.
Yeah, man. So yeah, I mean, we've been here for 2 months, right? I mean,
Yeah.
it wasn't like this before. We just finally got the pullback to 660. We finally had someone budge. You know, people were sitting at a table, not playing hot potato, but you know, I'll pay $1 for it. I'll pay $2 for it. I'll pay three. Someone finally grabbed it, and that set off a reaction of more people taking profit, so to speak, and just gonna get that rotation. Just understand how to trade that rotation, or find something to do with your hands. I don't. I mean, yeah, it is what it is.
Yeah. Yeah, I would. Yeah, I would say, don't chase puts is kind of still the best advice I could give as far as options trading goes. Chasing calls isn't the greatest either, but you got a better shot doing that than chasing puts. So, all right.
Good to go.
Yeah, that's it for me.
Perfect. Like and subscribe. Link somewhere, people.